Hello folks, today we're going to play Wall Street Reader. This is one of my all-time favorite games. I've played this game since 20 years ago, and it inspired me to pursue a similar career. I think it's a very fun game. Um, this is not gonna be a tutorial, so I'm not going to walk you step by step. I assume you know the basic mechanics, but we will try to introduce a fun element of fun. So let's begin. Okay, so we're gonna start off with a new game here. We start off with a billion, highest level of difficulty, 35 years. Okay, so what are we seeing here? Prime rate is 5.5%. Seems like the economy is strong, but let's see, the monetary policy is neutral. Um, I like to start off with the insurance industry. You actually can't find the insurance industry here. It's sort of like it's not visible here, so we can actually do this by finding a random insurance company like, I don't know, Chubbs. Okay, so we have Chubbs. Okay, so here we go. We start with Chubbs, then we go to the info, we go to industry summary, and then here we can find insurance companies. Normally I like to buy companies that are selling for net worth value, because that with a price to net worth of around 100%, because that means we're not overpaying. I like Hartford here. Let's take a look how big it is. Unfortunately, it's 20 billion, so we can't really buy a big stake of that. Let's see, is there any other company that's worth getting a stake in? Unum. Let's take a look at this one. It's still a bit too big. Let's see if there's anything else more favorable here. Yeah, they're all too big. To get a 50% stake would require about several billion. We don't have that right now. Let's see, is there some sort of small company here that we can get a stake in? This one will still require 3 billion, so this is not there yet. Let's see. Sometimes there are these smallish companies where you can get a stake for, yeah, not this one. It's too big. Let's see, let's shop around a little bit here. Getting a big, actually they all have tens of billions, so not really tight to get here. Ah, it's 100% owned, so not this one either. Let's see, is there something that is within our budget, our price range? Sometimes there isn't. Occidental Life Group, 90% owned by Transamerica. Okay, so we're probably Allstate. Allstate, 80% owned by Sears. Okay, not that one, I guess. Let's see. Yeah, this is worth 5 billion. I think we can get a 20% stake, but it's still a bit too risky. Okay. Let's see. Um, yeah, it's a bit high. So we won't be buying insurer yet, but we can go and look for some other industry and then get back to the insurers. Okay, so we don't want an industry that's overly heated, but one that's sort of like stable. Retail does well, Walmart, etc. So let's see, discounters, industry projection. Getting the right industry is very important because sometimes they are cyclical and then you get hit pretty hard when they're cyclical. See, Walmart is trading for just 138% price and net worth. Probably means it has a very low PE. What's the PE for this one? If we go to industry summary, yeah, the PE for Walmart is like, no, it's zero. Okay, so it has 35 billion of market cap, 25 billion of net assets, and its EPS, well, it was losing last year, but if we're looking at the projections, it's probably going to be like $2 to, if it's 60 cents per quarter, then it's probably like $2 per year. So the PE is not actually that high. If we're looking at this level of return on assets, it's probably going to do quite well. So yeah, let's just buy some Walmart and then wait for it to do well. And then let's see, 2% of Walmart. Let's go for 3% of Walmart, I guess. Okay, so now we are proud shareholders of 3% of Walmart. And we'll just let the ticker run for a little while. I think Walmart at these prices is doing well. The industry economics are favorable, and the industry short-term outlook, it's moderate profitability, demand is improving. No one in the industry is really growing too rapidly. Costco is cutting capacity. DH is just 13% of overall market share and 9% growth. Target is 6%. Everyone else is near, well, the credit rating is C, which is like junk grade, so we're not too worried about these. So the overall industry dynamics are good. Dividend yield is 2.4% for Walmart. I think when the computer starts this randomized scenarios, Walmart was losing money historically, but with these strong industry economics, it looks like he'll be earning money pretty soon. If it's pre-tax return on capital assets of 25 billion for 18%, it's about 4 billion a year. With even after tax, it's going to be maybe 3 billion for 35 billion. It's like a P of 10. So that's what we can expect, and I think Walmart will do pretty well pretty soon. So right now we can move the ticker speed to 100 and just let it run quickly and let Sam Walton work for us. Okay, first quarter net results in for Walmart, 57 cents per share. Next quarter is increasing to $1.10 per share. So the run rate at $1.10 per share will be $4 per share, which means a P of just 18 for a market leading company with a strong balance sheet and strong return on assets, with competitors not expanding too aggressively. They're expanding, but not too aggressively, and they have all these CCCs who probably don't have any money to expand. So let's continue. Let the ticker run a little bit. We're already making money. We're at 1.06 billion, and let's just let it run for a little bit here. Okay, so this is not related directly to us, but there's some restaurant chain that's got sued. Wendy's sued for $1 billion. These things actually happen in the game. They actually happen in real life too. Lawsuits that, for better or worse, cause huge damages, which is why in this game, be very careful which industry you get into and be diversify a little bit. I think in the early games 20 years ago, early version of the games 20 years ago, they didn't have that many of these random events. But I think in the later versions of the game, you're much more likely to be hit with all these events that are catastrophic, like a fire causing a utility company to go bankrupt or something. So yeah, just gotta be very careful with these and be conscious that even if you own a good business in Wall Street Raider, a huge fine or a huge lawsuit could hit you anytime. Okay, keep it moving forward. Okay, so we're in the second quarter. Let's see what we are at. Oh, so it split its stock. That's why it's 37 now. It used to be 70. It's 30 something now. Earnings are up to 50 cents, which would have been a dollar in the previous quarter. It's expected to decline to 0.43. Okay, Costco is losing market share, and DH is increasing its market share very aggressively. I think we're doing fine. We're spending a bit more on marketing, 14% compared to DH. That's why our return is so low. But at 43 cents per share, that's still $1.60 per year on an annualized basis, which is not too overvalued for Walmart. So let's let the ticker keep running and see how that goes. Okay, Walmart reported third quarter earnings, 45. Next quarter is 43. Full year earnings, so that would be about 160 or $1.60. Yeah, still doing well. Strong market share, good dividend yield, good everything. We're gonna hold. Okay, so this is about some bank failure. Also happens in real life, but That's just okay. So there's a tax increase. The corporate tax has been increased to 45% to provide free healthcare to all citizens. Um, yeah, so tax increases happen in this game, and we'll see about tactics to deal with that later. Okay, Fed is moving to restrictive monetary policy. Prime rate is surging. It's at 8%. Okay, let's see what happens with Walmart. Okay, Walmart increase earnings will increase in the next quarter to 60, so it's showing some growth momentum actually. We're at okay, Walmart's management has shifted to a strong growth mode of 16% growth, 14% of marketing, and the expected return is actually 18%. So if we go back to the capital assets of like $23 billion, this 18% should make about 4 billion a year as minimal debt. So 4 billion a year should flow through to about 35 billion of market cap. So the in layman's terms, it's like 9 times earnings before we get into the taxes. So let's continue here. I think we're on a good path. We're above a billion again, 1.1 billion. So we're up 14% already. Interest rates are being increased aggressively. GDP growth is still good. So Walmart. Okay, so this quarter it's gone to 60 cents per share, and it's projected to increase to 69 cents per share. So on a run rate, basically 70 cents times 4 is $2.80, which makes the $40 per share would be near to around a P of 12. And that's just a shorthand. Obviously, you have more complicated ways of measuring it, but I think it's good enough to make that point. Okay, the stock is soaring. We're up 50% to 1.5 billion. And okay, yes, another quarter. Okay, so it went to 67 cents, and now it's projected to increase to 79 cents. So that would be like $3 per share. The P would be around 16, and um, and yeah, it's doing well. So let it run for a little bit. Sometimes it takes a while for the company to revalue these companies. Okay, so the corporate income tax has been increased to 54%. It was 45%. It's now 54%. Obviously, this does happen in real life too, but we are not too worried about it. Let it run. Rates are being eased. Okay, 66 cents per share to increase to 78 cents per share next quarter. We're still looking at a run rate of over $3 per share. Returns are good, 27% on assets. Price to net worth is surging, 188. I think what happens in this game is when you have a few years of good track record in profitability, the price to net worth could go to something like 500 or 700%, and that's when it gets really overvalued because basically it's selling for way more than replacement value. And then right now it's doing well on all fronts. It's growing rapidly, 24% capacity growth. The market share is 30%, which means it's way below the 50% that will trigger frivolous antitrust lawsuits. The return on capital assets is 27%, which is very good, and there's a nice dividend yield to pay for the Hamptons. The credit rating is A, which means it can continue to lever and increase its capacity. So what's not to like? Industry is growing as well at 15%. So let's let it keep running. Okay, it has some debt of 93 million. There's a lot of cash lying around, so can pay that off. And I like to change my bank to the big banks because in this game, the big banks are your friend, actually. The smaller banks are much more likely to be controlled by Wally Raider, which is the computer AI, and they might freeze your loans at a time that's most inconvenient. So it's much better to change your bank to a big bank that's much harder for Wally Raider to control. Since, for example, JP Morgan Chase has a stock capitalization of 50 billion, Wally Raider will need to pay 10 billion to own a stake in which it can basically influence the operation of the company. So We're going to change our bank here to CNB. Okay, great. So we're less worried from that front. Okay, now let's go back to Walmart and let it keep running. So Walmart up to 84 cents per share of EPS. That means on a run rate, if we just multiply by 4, that's almost, how much is that? 340. Okay, so that's very, very good. It's projected to decline a little bit in the next quarter. So yeah, and this might have a short-term negative impact on its stock price. Sometimes that happens. But on the other hand, should do well in the long run. So let's let it keep running. See, this game is also sort of like Wall Street with its myopic focus on short-term profits. When actually, see, this quarter is bouncing back because of the strong profitability and growth. Our market share is actually up to 34%. We're beating Target, beating Kmart. I'm not sure why Kmart is still here in this game. Anyway, everyone else is doing badly. We're doing well. We're profitable. We're growing. So yeah, I'm not too worried about a quarter or two of results. See, the results bounced back this quarter and the stock is taking off. We're at 1.6 billion already. So yeah, it's like Wall Street. This game, the AI is very good mimic of Wall Street, being overly focused on short-term results. When with this strong, okay, so sometimes you get a good thing here, like Walmart gets excellent results on marketing campaign because it's been investing so much in marketing in the past few years, I guess. So let's let it run. Okay, we're up to $82 per share. We're up to 2.5 billion. Earnings are projected to soar to $1.67 per share. So the run rate, that's nearly $7 per share. So an EPS of still 10. So I'm not too worried about selling at this point. I'll be worried about selling later. But right now, everything's going well. We're at 2.5 billion. And everything's looking forward. Okay, so commodity price panic, something about inflation at 20%. Okay, so it looks like this game is really keeping up the Joneses with these realistic inflation rates. And okay, so the Fed is going to tighten monetary policy. That does not necessarily mean we have to do anything because, Walmart has very low debt and it has a 42% return on capital assets. So it's doing very, very well. 42% return would be like $10 billion a year of profits. The market capitalization is 84 billion, it's 10 billion. And this industry is not very sensitive to economic fluctuations. The worse the economy, the more you have to buy Walmart. So we're not too worried about this. Let it run for a little bit more. Let's see what happens here. Oh, earnings are expected to increase to $2 per share. So it's going to be about $8 per share run rate, which means its EPS is less than 10 right now. Okay, another tax. Looks like this game is really mimicking real life here. Not sure, but some other dumb tax here of 3% collected quarterly on blah blah blah. Okay, it's a healthcare tax. Doesn't seem like it's impacting us. Prime rates are surging. I'm thinking maybe a good time to sell our Walmart shares, but we can give it a little bit more time, given that it's doing well. Its projected return on capital assets is 49%, so it's basically minting money at this stage. I'm not super worried that the overall market here is down, and we're looking at 13% prime rates because this is going to just have a marginal impact on Walmart. Let's see, the core income was $2 per share, and it's going to decline a little bit in the next quarter, but it's still at a run rate of $8 per share. The economic policy sort of varies widely in this game, so if you uh, follow the rates too closely, it could be pretty bad. It's much better to just hold the stuff that's working out. Prime rate is 14% because of all the politicians raising taxes and spending money, I guess, and all the high inflation rate. Okay, earnings are fluctuating on a quarterly basis again, and then the stock is volatile, but we're still at 2 billion, so we doubled so far. And now the market is sort of repricing it after the initial drop from the Fed hike and from quarterly earnings fluctuations. It's now doing well. Not sure why, but the earnings are being cut into at 32 per share. It's looking at a run rate of 5, so the EPS would be like 17. But yeah, now it might be a good time to sell actually, because we're looking at yeah, we can lock in our profits right now. I think the price net worth is 249. The economy isn't in the best shape, and profit margins are declining from 50 to 29. So it looks like it's not in the best of shape. Let's sell and take some profits. Okay, we're gonna have to pay $300 million in taxes for selling this. If I were a certain famous individual, I wouldn't be paying anything, but I'm not. And this game has a very stringent tax regime, so we're paying it, and we got a gain of $1 billion. Great. So now we have $2 billion. We basically made 130%. So what do we want to do next?